Have you ever wondered how seemingly intelligent people can lose everything chasing a dream that turns into a nightmare? History is littered with such tales, and today we're diving into one of the most infamous, the Dutch Tulip Mania. It's a story of irrational exuberance, speculative frenzy, and a stark reminder that sometimes value is just an illusion. What can a flower from the 17th century teach us about our investments today? More than you might think. Imagine 17th century Holland, a time of prosperity and burgeoning trade. Into this world arrived the tulip, a beautiful, exotic flower from Turkey. Certain varieties, especially those with broken petals displaying vibrant, fiery patterns caused by a virus, became incredibly rare and desirable. Initially, tulips were a luxury item, a status symbol for the wealthy. But soon, their appeal began to spread, and with it, a dangerous idea. Tulips weren't just beautiful, they were an investment. As demand grew, so did prices. People started buying tulips not for their beauty, but to sell them for a quick profit. Soon, contracts to buy future tulip bulbs were being traded, often multiple times, before the bulbs even left the ground. At the peak, a single tulip bulb, specifically the Semper Augustus, could trade for more than the cost of houses, entire estates, or even the annual income of skilled craftsmen. People mortgaged their homes, invested their life savings, and even traded land for these fragile flowers. The belief was that prices would only go up forever. Then, in February 1637, the bubble burst. The exact trigger is debated, but suddenly, buyers vanished. Confidence evaporated overnight. Prices plummeted, and panic set in. Those who had invested everything found themselves holding worthless paper contracts or bulbs that no one wanted. Fortunes were wiped out, families were ruined, and the Dutch economy faced a severe shock. It was a stark lesson in the difference between perceived value and intrinsic worth. You might think such a silly idea could never happen again, but the human psychology behind it is timeless. Consider some of today's tech stocks, trading at astronomical price-to-earnings ratios, sometimes hundreds or even thousands of times their actual earnings. Are these valuations based on solid fundamentals, or on the hope that someone else will pay even more? We also face unprecedented national debt, with trillions owed globally. The idea that our global reserve currency could collapse under its own weight, much like the tulip market, seems unthinkable. Yet, history shows us that unsustainable promises eventually unravel. Tulip Mania teaches us that speculation, driven by emotion and the fear of missing out, can lead to catastrophic outcomes. It reminds us to question the true value of an asset, to understand what we're investing in, and to be wary of promises of endless returns. The lessons from those 17th century Dutch investors are as relevant today as they were then. Always do your own research, understand the risks, and never invest more than you can afford to lose. If you found this historical parallel insightful, please like this video to help us share content and inspire us to create more. We wish you a blessed day.